Credit Suisse Group says it will borrow up to $54 billion from the Swiss National Bank to strengthen its liquidity. Swiss regulators pledged a liquidity lifeline to Credit Suisse after the flagship lender's shares fell by as much as 30% on Wednesday. This came after the bank's largest shareholder, the Saudi National Bank, said it could not provide further support. European bank stocks plunged, and on Wall Street, the Dow dropped more than 700 points on Wednesday. John Terrett has more details from the New York Stock Exchange.
Credit Suisse is a 150-year-old European banking behemoth. The trouble is, in recent months, there's been concern that it may not be quite as healthy as people had assumed. Within the past 24 hours, the Saudis came out and said that they wouldn't give the bank any more money if things go south. Now, the Saudis are relevant because they own 9.88% of Credit Suisse, and they don't want to have to own any more than 10% because they will hit a regulatory hurdle, which they don't want to do. For that reason, because of those comments, Credit Suisse shares were suspended in Europe on the Wednesday session, and in New York, where they also trade, they ended up down 14%. But that is a lot worse than it was earlier in the day, and that happened because towards the end of the trading day in New York, word came that the Swiss authorities, the regulators in Switzerland, were talking to Credit Suisse about stabilizing the bank. The trouble is, it all comes in the wake of the regional bank collapse of SVB in Silicon Valley here last week, and worries about other regional banks, such as First Republic, down 21% on the Wednesday session, PacWest down 13%, and concerns about big Wall Street banks like JP Morgan Chase, Bank of America, and Morgan Stanley, whose shares were down between 1% and 5% on the Wednesday session. Also on Wall Street, concern about inflation after CPI, which is consumer inflation, came in line with expectations. PPI was down a little bit, that's wholesale inflation, and retail sales were disappointing. The Federal Reserve will have to take this into account when it meets next Wednesday to discuss its next interest rate move. The feeling on Wall Street, because of the banking crisis, is it could be a 0-point move, nothing to recognize the seriousness of what's going on with Credit Suisse and the regional banks here. John Terrett, CGTN, on the trading floor of the New York Stock Exchange.